morning, everybody, and welcome to the latest of our FrenchEntrée webinars. My name is Zoe Smith. I'm digital editor of FrenchEntrée, and in today's webinar, we're going to be focusing on buying property in France for Americans. I'm joined today by a panel of 3 experts from our partners at Agence Newton, Citrine International, and Moneycorp, and I will introduce you to all of them in just a moment. For those of you that aren't familiar with FrenchEntrée, we are part of the France Media Group, who are specialist publishers covering all aspects of French life and culture, from travel to gastronomy to buying property. FrenchEntrée itself has been a leading resource for French property buyers for 20 years now. Not only do we help buyers to find their dream property in France, we also help and advise with every aspect of the property buying and moving to France journey. Now, if you are looking to buy a property in France, you may also be interested in our French Property News magazine, which you can subscribe to over on the FrenchEntrée website. And whilst you're there, you can also sign up for our free weekly newsletter and become a FrenchEntrée member, which gives you free access to our full property database. Finally, while I imagine most of you joining us today are in the States, if you do happen to be in the UK in January next year, make sure to sign up for our French property exhibition. This is a really great opportunity to come and meet all of us in person, browse thousands of French properties, and attend seminars from a wide range of industry leaders and experts. Some of today's panelists will also be there, and we'll also have experts covering subjects from buying property, tax, legal, mortgages, to visas, healthcare, currency exchange, and much more. Entry is free, and you can register for tickets on FrenchEntrée.com or FrenchPropertyExhibition.com. So without further ado, I would like to introduce our panel of experts, and a huge thank you to all of them for kindly giving up their time to join us this morning. So first up today will be Sheila Gorham from French property specialist Agence Newton, who is going to be talking to us about the French property market and offering her advice for Americans looking to buy in France. Next, we will have Greg Trotman from tax specialist Citrine International, who is going to talk us through some of the crucial tax issues that US buyers need to consider. And last but definitely not least, we will have Kelly Cutchin from currency exchange specialist Moneycorp, who will be offering her advice on how to secure the best currency exchange rate and how to make the most of the current rate. So that is more than enough from me. So let's go straight over to our first speaker, which is Sheila Gorham from Agence Newton. Over to you, Sheila.
Good morning, ladies and gentlemen. I hope you're all having a lovely day today. I'm a director for Agence Newton, and I'm based in sunny Normandy in France, although I must say it's somewhat windy and not very sunny here at the moment. I'd like to talk to you about the buying process and how it differs slightly from buying in the USA and the process that you will need to go to find your dream home here. So the main difference between buying in the USA and France, there are 2 real main points to cover here. My understanding is that when you buy in the USA, the furniture is normally included in the price of the sale. In France, it isn't. It can be a separate negotiation between you and the vendor, the seller, should the vendor wish to leave furniture. It could be that they just leave a few key pieces. It could be they clear the house and it's completely empty. Or it could be that you look at the furniture and decide it's nothing like your taste or what you'd want anyway. But please don't automatically assume that any is included. The second thing to remember is that the agents over here all work independently. So unlike what you're used to, there is not just one real estate agent that will take you to all of the properties that you want to view. You would need to work with various agents in the different areas for the different properties. Once you've arranged the area that you'd like to buy in and you've set up some viewings, when you arrive to view the property, the agent will normally ask you to sign a piece of paper called a bon de visite. This is to cover them and their insurance should you have an accident on the property. It also proves that they've taken you to the property should you decide to be a bit naughty and try and buy it behind their back. But also it shows the vendor, if the vendor is to turn around and say, well, you've never had any viewings, then the agent can say, yes, I have. I've brought Mr. and Mrs. So-and-so on such and such a date. That sometimes happens when the vendors don't actually live on site. But a bond visit is nothing for you to worry about. It is purely a piece of paper that you're signing to say that you're going to visit that property with that agent, and it will give you insurance should you have an accident whilst you're there. I'm going to talk to you a little bit about the buying process. It's quite involved, and I don't expect you to remember it all. We're not going to test you at the end, but I've got a few key points that I'd like to talk around. So you've been out with your agents and you've found your ideal dream home. You would then negotiate an offer that may or may not be accepted. What we're currently finding in France, because of the market, which I'll come on to, but offers are very close to or are actually the asking price. Gone are the days where you could come over here and knock 20-30% off the price, because there's a lack of properties, and so that's not happening anymore. You would need to consider with your offer if, say, for example, the property needed a new septic tank, which is quite common in France. Most of the houses in the countryside run from septic tanks. And because the rules and regulation change every 3 years, the chances are it won't conform to normal standards. So you would need to consider that with your offer if the septic tank might need work. Other things that clients sometimes consider is, does the property have double glazing or not? And does the property have central heating or not? Surprisingly, there are still many homes in the country over here that survive with wood burners and open fires and won't ever dream of having central heating. But they're all things to consider when making your offer. Once your offer has been accepted, which is brilliant news, you're halfway there to owning your dream home, you may be asked to sign a French document called an offre d'achat, which is basically confirming your offer legally. Both parties would sign this to confirm A, that you've made the offer, and B, that your offer has been accepted. Not all agencies do this, so it may be a document that you may or may not be asked to sign, but it's once again nothing to worry about. The agent will ask you to provide all of your civil status documents in order to be able to draw up the exchange of contract. This will include your identity cards, passports, birth certificates, marriage certificate, previous marriage certificates, if applicable, any prenuptial agreements that you may have. They would also ask you for your full home address, your occupations, and your place and date of birth, because sometimes we can't always read it on the birth certificate. All of this information is then fed into the document that's drawn up that you would sign, the compromis, which I will come on to. At this time, you would also be asked to transfer a 10% deposit. This 10% deposit goes either to the agency or the notaire, depending on who you're buying and working with. And it is refundable under certain conditions, which I'll come on to. Some notaires, if they are drawing up this contract, may ask you for an extra 200 or 300 euros, which isn't refundable should you change your mind, because they feel they should be paid for the work that they're doing drawing up the documents. But standard is a 10% deposit before you sign the compromis. The compromis, or promise de vente as it is known, is the equivalent of what you would probably call exchange of contracts. It's a legally binding document that can either be drawn up by the agency, or in our case, we favour it being drawn up by the notaire. And everybody, both buyer and seller, ideally would go to the office to sign this document. If it is with a notaire, the notaire will insist that a translator, a registered translator, is present, because even though a lot of the notaires speak really good English, their job is to confirm that you have understood everything you have signed. And so an independent translator is a must. They will also, during this signing, go through a series of diagnostic reports that the seller has had to provide. So when you sign, you would know everything there was to know about the property, and they can say that you've been given all the information and you've made an informed decision. The diagnostics include the energy efficiency rating, the asbestos. Quite often, asbestos was used until the 1970s in the cement used to hold the tiles on over here. It's not considered dangerous, but if you were to have a new roof, then obviously the roofer would need to know to dispose of it correctly. Sometimes as well, with very old outbuildings, you might get the corrugated iron roofs that have asbestos in. There's a test for lead. Generally, this is found in old paintwork on old windowsills, old window frames, and if it's really old, it can start to flake. The reason they do a test for this is because you mustn't eat it. It's actually toxic. And so that's the test for lead. Also, we have all of the electrics are tested, all of the sockets, all of the panel circuit boards, absolutely everything to do with the electrics. And you can guarantee 99% that there will be some sort of fault that they list on the documents, because I think they have to, find something. So it could be something very minor, like the plastic cover that goes over the panel circuit board has got a crack in the corner, or it could be, that this socket needs tightening up, or obviously it could be something more serious. Usually, if it is something more serious, the agent would know about this before you even go to sign and would be able to make you aware. Finally, we have the gas report. And the gas report will check, obviously, if there's any gas central heating, if there's gas cooker, and even if there's a gas bottle, there's a tube that goes from the bottle to the cooker that would have a date on. And you'd be surprised how many of those go out of date. So you would have all of those reports, plus, as previously mentioned, a report for the septic tank. And then you would be making your informed decision based on the results of those reports. In France, should you want a full structural survey, that is different, and that would be up to you. There are structural surveyors over here, but it's not a French thing that they normally do. The other report, which is only valid for the southern half of France, is for termites. They haven't learned how to swim across the Loire yet, so we don't have them up in northern France. But in southern France, it's another report that is done in case you've got these wood-boring insects. So you've sat in the notaire's office, you've heard all of these reports, you've confirmed all your civil status details, and at the end of it, they'll ask you to sign on the iPad to say, yes, you agree. Following this signature, you would have a 10-day cooling off period. In that 10 days, you have the option to pull out of the sale without having to give a reason. But you would have to put it in writing in French to the person that you've signed the compromise with. At this point, you would then have your 10% deposit returned, less the 200 or 300 euros that we've already mentioned that the notaire could keep for drawing up the document. If there's any reason that you couldn't attend the signing, it's quite possible to have a procuration or a proxy drawn up whereby the notaire or the notaire's clerk can sign on your behalf. We do prefer, if possible, that the clients are here to sign in person, because there's an awful lot of information that comes out of this first signing. The boundaries are confirmed, all sorts of things. The other thing that's also confirmed with the vendors as part of a sale is the chimney has to be swept, the boiler has to be serviced, and the septic tank has to be emptied if it is above a certain level. So they're things that you don't have to worry about. You would be given the certificates to prove that this had been done. There are certain circumstances called suspensive clause that you can have inserted into this first compromise or promise that gives you a get out clause after the 10 days. Generally, this could be something like subject to obtaining satisfactory mortgage. With that, you can't turn around 6 weeks later and say, oh no, sorry, I didn't get the mortgage. You would have to prove to the notaire that you tried and you'd unfortunately not been able to secure the mortgage. There could also be a suspensive clause saying subject to satisfactory sale of your property. But for that, your property would have to be already under offer with a sale going through in order to be able to use that clause. It couldn't be, say, subject to sale of your property and your property is not yet on the market, and therefore it leaves it completely open-ended. There is always an end date put into this compromise. So once this is done, the notaire then generally has to write with details to the Government Agricultural Board called SAFER. And you will hear about SAFER, spelt safer, quite a lot when you're over here. What happens is they refer the land, or in some cases your garden, to the SAFER to see if they want it for agricultural use. This doesn't happen for apartments, obviously, and it doesn't happen on city centre properties. But as soon as you get outside the city, it is standard practice. SAFER have two options. They can either take 2 months to reply to the notaire saying, no, we don't want it, and it doesn't cost you anything. And then at the end of that 2 months, you can complete. Or if you're desperate to move in sooner, the SAFER will accept payment to speed up the process and answer within a month. I can't give you an exact figure for SAFER because it varies between departments, but it's generally between 100 and 300 euros. So you've got your completion date and it's come around very quickly, normally within 2 to 3 months. And obviously it's exciting. But before you go to the notaire to sign on the day, please go and visit the property, because the notaire will ask you if you visited the property on the day of completion. And if there are any issues when you were to get there, for example, you might have expected a big barn to be emptied of all the rubbish, or you might not have expected the tree-lined avenue to have had the trees cut down. If you haven't visited the property, you can't make the notaire aware and nothing can be done about it. If you were to arrive and there was an issue, the notaire can be contacted immediately and can, if necessary, withhold funds from the vendor until that situation is resolved. To be fair, in 14 years of selling houses, I've only ever had 2 issues. And one was, as I've said, they'd cleared the house, but they'd left all sorts of stuff in the barn. So the notaire rightly withheld 5,000 euros and said, we'll give you that when you've cleared the barn, or we'll use that to get the barn cleared on your behalf. So it really doesn't happen very often, but for peace of mind, you should really visit the property before going to sign. So you'll all go back to the notaire to sign. Hopefully, if you've got a lovely agent, they might treat you to lunch on the same day. And then at the end of the second signing, you will get the keys and you can then sail off to your new home. One thing you will have to do that the notaire will want proof of is that you have the property insured from the day that you get the keys. This is a legal requirement in France, but I'm sure the agent that you work with will happily help you sort out insurance. So that's it. You're finally in your dream home. Now I'd like to talk to you a little bit just about the market in France at the moment. Okay, so the market in France today, like everywhere else, I think has changed drastically since COVID. The market was steady before COVID, and then after the first lockdown, the cities emptied and everything in the countryside was brought up by Parisians or Toulouse or whatever, but all of the country homes were suddenly bought up because I think a lot of the city dwellers didn't want to have another lockdown. Since then, the market has been fast moving. One of the problems we've encountered is the lack of properties for sale compared to what there was pre-COVID. As I mentioned, having done this role for a very long time, generally I've always worked with 60 or 70 properties. Today, that's down to about 20 to 25 properties, and there's very high turnover. What we're finding is properties do sell very, very quickly now. If they come on the market and they're priced right, they're not there for very long. So please, when you view, without meaning to put any pressure on, because we don't like that, but don't think you've got 6 months to think about it, because the chances are the viewer, the next viewer may just snap it up. I've also, as you can see, got a few properties here just to show the examples of the style of properties that a lot of the Americans like to buy. They tend to be the smaller chateaus or the manor houses, houses in the country with a bit of land, nice surroundings, and they tend also to be houses that are very well presented. A pool is a lovely option if you've got the weather for it. But we don't tend to see Americans buying up renovation projects or, properties that hasn't even got a roof on. It tends to be the much nicer properties. And hopefully when you come to visit, there'll be a good selection for you to choose from. So that's me. That's very briefly the buying process. Hopefully, if you've got any questions at all, I'll be happy to answer them. And I wish you all very good luck in coming over to France and finding your dream home. Thank you very much.
Great. Thank you, Sheila. Lots of really good advice there for those of you looking to buy in France. Right, we're now going to put a few quick questions to Sheila. So first of all, let me just get them up. When do the buyer and seller have a binding agreement to purchase the property, and can the seller or buyer cancel at any time?
So legally, once they have signed the compromis or promise, then they are legally bound. The seller cannot back out. The seller does not have the option of having the 10-day cooling off period. The buyer, as stated, has a 10-day cooling off period. After that, they are committed, and should they pull out after the 10 days, unless they've got a suspensive clause, as previously mentioned, they would lose their 10% deposit.
Okay, great. And is it possible to carry out a virtual viewing on a property? And do I need to be in France to carry out the purchase itself?
Since COVID, there's a lot of agencies now, ours included, that have been doing video tours or, where possible, virtual tours. Virtual tours via WhatsApp work really well. But please bear in mind that sometimes when we're in very rural France, there's not a 4G signal, and so it can be, a video only. Yes, it is possible to buy without visiting, but most of the notaires don't like it. We can do proxies, as I've mentioned, and the notaire can sign on your behalf. But I think the downside of it is, as much as we can show you on video, occasionally people might get to the house and it's not as they were expecting. So I do think if you can visit, it's much more important.
Okay, great. So it's good to know that it's possible, but yeah, probably not recommended. Okay,
it's possible, but not recommended.
Yeah. Okay, one more quick question for you. I've had quite a few people asking about birth certificates, saying firstly, well, birth certificates and documents that are needed to purchase a property. So do they really need a birth certificate, or will a passport suffice? Do they need originals of all of those documents? Do they need to be date or time stamped? Any clarification on those points?
Yes. The birth certificate, yes, it is necessary. So passports, birth certificates, marriage certificates, divorce certificates, if applicable, are necessary. But they can be sent over as clear scans to the agent, because obviously you don't carry them all with you. You can scan them and send them over, and then the agent will prepare the dossier for the notaire. They don't have to be, less than 3 months old, or date and time stamped, anything at all, but they must be the originals that are scanned.
Okay, great. Thank you for clarifying that. Right. Thank you, Sheila. We'll come back to Sheila again at the end with more questions. So do keep putting them in the Q&A box if you've still got any questions. And before we go over to our next speaker, I'm just going to put a quick poll up on our screen. Let me just find it for you. All right. Should be able to see that now. So question is, what are your biggest concerns about buying property in France? And this is a multiple choice one, so you can select as many as you want. So the first one is house prices or the current housing market. Second one is getting a French mortgage. Third one, securing the best currency exchange rate. French and US tax responsibilities, that's always a concern for people. French inheritance laws and estate planning, French property laws or avoiding common pitfalls, or speaking and understanding French. So I'll just give you a couple more minutes to answer that. Yeah, there we go. Yeah, quite a lot of you saying getting a French mortgage. And if you are interested in more on French mortgages, we don't have a mortgage expert on our panel today. However, the last webinar that we did, I think about a month ago, we did have an expert on mortgages, and that is available to stream for free over on our YouTube channel. So that's a FrenchEntrée YouTube channel, so you can look it up on there. And some really good advice for Americans there. In fact, I think we put a specific question to her about that. Right, I'm going to end that poll and share those results with you on the screen. So it's actually pretty even. A lot of questions about French and US tax responsibilities, which is a good one because that's what we're going to be talking about next. Mortgages, house prices, French property law. Yeah, lots of concerns there. Great. Okay, thank you very much to everyone for taking part in that. I'm going to stop sharing that now. And we're now going to go over to our next speaker, which is Greg Trotman from Citrine International. Over to you, Greg.
Thank you very much, Zoe. Hopefully everyone can hear me loud and clear. My name is Gregory Trotman, and I am the Managing Director of Citrine International. We're specialized in dealing with Americans and Brits who have cross-border tax issues. And we have offices in London, Oxford, and Paris. So what I'm planning to cover today is aspects, particularly of US taxation. That's my area of expertise. I work closely with French colleagues and lawyers in Paris who advise on French tax aspects. So I won't be drawn into too many direct questions on technical issues on French tax, but I'm happy to answer questions on American tax till the cows come home, as they say. So what I'm planning on covering in this presentation, which is brief, only about 10 minutes, will be tax aspects of owning French property, how you go about doing that either directly or maybe through an entity, what the tax on rental income would look like from a cross-border perspective, and equally the tax issues that may arise when you actually sell the property at some point in the future. Key to all of this is double tax relief, because we're talking about 2 jurisdictions, so we'll get into that a little bit. And then there are some very specific tax issues we need to cover off on in relation to taking out mortgages. Because tax is such a wide subject, I do feel the need to say what we're not going to talk about here. Namely, we're not going to touch on inheritance estate taxes today, or anything not related to US or French taxes, just to be clear, and the French wealth taxes, or anything not to do with tax at all. So that way we can keep focused on what I hope will be some interesting points. So who are we aimed at? When we're talking, we need to define our audience, and sometimes that's clear, sometimes it's not. So I'm directing my commentary today at Americans who own or are looking to acquire French residential real estate. So what is an American for these purposes? Again, it might be obvious, might not, but from a tax perspective, I'm addressing people who are either US citizens, US green card holders, lawful permanent residents, or people who are tax residents in the United States, and that will usually be down to having spent a lot of time in the US. So without further ado, let's get into actually owning the property. How can you do that? I mean, you can buy a property directly in your name or jointly with someone else, or you could own that property through an entity such as a company or a partnership. And each of those will have things that you need to think about from a tax perspective. If you own a property directly, it's fairly straightforward in one sense. If that property is rented and it generates rental income, you'll be subject to American tax on that rental income. And in France too. Equally, if you sell that property, there will be US and French taxes to consider at that point. And again, when I mentioned mortgage exchange rate gains, we'll leave that one for last because it's an interesting little nuance. If you own a property through a company, and one of the companies that you will come across as you're conversing and getting knowledge on this issue is what's called a Société Civile Immobilière in French. And SCIs are used frequently by French people to own property because there are inheritance tax advantages. But again, we're not going to get into inheritance tax today. But from your perspective, at a very top level, you need to understand whether this entity would be subject to income tax or corporation tax. In other words, whether you as the owners are taxed directly on whatever income the SCI generates, or whether it itself will have to pay tax to the tax authorities. And the answer with SCIs is it could be one or the other. There is a little default rule in there which says if property is rented furnished by the SCI, by the company, then it will definitely be subject to French corporation tax. So why do we care about all of that? Well, obviously, we need to figure out who's paying tax, but there could be double tax issues if you don't align things between the two tax territories. So what is good in France may or may not be good in the United States. And so once you've established whether the United States will consider this entity that you're using is either a company or it is transparent to you personally, you may want to think about actually making an election with the IRS so that these two things do marry up, because you can elect under US tax law when you have an entity just for tax purposes for it to be treated as a company or as a transparent partnership or self-employed business. All I would say is, while that is a thing that you can do take advice on. It's very specialist, and it can cause headaches if you do it without thinking it through properly. It can have some US tax consequences when you make the election if there is value in that company already. There are some other tricksy little rules which I don't intend to get into today because they could be subject to a session lasting hours on their own, particularly US anti-avoidance rules where Americans are owning foreign companies, but you're well advised to take advice on these. These are what we call the CFC and the PFIC rules, CFC being controlled foreign corporation rules, and PFIC being the passive foreign investment company rules. The bottom line here, if to the uninitiated, is definitely take advice, because these are anti-avoidance rules designed to tax you in the US on things going on inside companies, and there can be a lot of additional reporting. So don't fall into the trap. Get a professional advisor to help you figure out whether you're exposed to these rules. So let's drill down a little bit here and see how rental income is actually taxed in the United States. Well, French rental income will be taxed to a US citizen on their, or a US resident or a green card holder, on their US tax return at a federal level, and possibly a state level if you're resident in a state that has an income tax. On top of all of those taxes, there may be the Obamacare surcharge if your income level is high enough, and that would be at 3.8% on the net rental profits. How you get to rental profits and how you determine what's taxable, well, you can claim expenses for things like mortgage interest, real estate taxes, things that ordinarily and necessarily relate to the business of renting the property out. And the one I want to highlight here, which sometimes gets missed, is depreciation, because under US tax law, when you're working out your net rental profits, you are required by law to claim depreciation. And that's an advantage. It reduces your rental profits. But as we shall see, it has an impact later. So if you don't claim the deduction today, you may regret not having done so later. You need to be careful about personal use if you're going to rent the property, because if your personal use of that property exceeds 14 days or 10% of the total number of rental days, then you'll find the you'll find that the amount of expenses that you can claim is limited. The personal elements are denied. If you find yourself in a loss position, yes, from renting the property, you'll find typically that these are what are called passive losses. So you can only offset those losses to reduce other passive income. So if you have one rental property making a profit and the other one making a loss, you could offset the loss against the rental income, but not against your other income, like your income from work, employment, or self-employment. One other thing your accountant and you should be aware of is if you are renting a French property, that there may be an additional form to pop into your US federal tax return. This is Form 8858. Not a lot of people know about it, but this is essentially where you're running the books of that business, that rental property, not in US dollars. And it's quite logical that really you might be doing that in euros, given that this is a French rental property and you've probably got people paying you in euros. I'm not going to delve too deeply into the French side of things. As I say, I'm not the expert in French tax, but I obviously have a good awareness in it, being in the cross-border sector and advising you Americans in France. But you will be taxed in France on rental profits. The key things here to note are, well, that tax rate could start at 20% and go up to 30%, or you can apply an average rate based on your worldwide income. So it might be different to the flat 20-30% we're talking there. And there will be a social charges calculated on top of that at 17.2%. Now, when you're determining your taxable profits in France, then there will be a difference between how the expenses are calculated in the US and France. I mean, if you have a look at the slide here, we'll note that if you've got an unfurnished property rented on a non-professional basis, you don't get to claim depreciation in France. So that can be a significant difference in arriving at net profits. France does allow losses for tax purposes, but they're limited, as you can see. So you can offset it against global income rather than just categories of income like in the US, but only up to 10,700 euros. Double tax. This is really the main issue that everybody is concerned about. It's, well, I've got to get to grips with the local tax authorities in France and filing tax returns, reporting my rental income, and I have to do this on my American tax return, which is more familiar to me. But what about double tax? Am I going to pay tax in both territories? Well, the answer is you could if you're not careful. There is a system under US domestic law of double tax relief through foreign tax credits. And there are provisions in a treaty, a double tax treaty for income tax purposes, that sits between the US and France, that arbitrates. And the treaty will allow France to tax rental income, and the US, by virtue of citizenship and residency, will want to tax it too. But you can claim foreign tax credits for the French taxes paid to reduce your US tax liability. Now, herein lies the rub. You need to be careful about the timing sometimes, because you can claim credits on your American tax returns using one of two methods, the paid method or the accrued method. Now, if you're on the paid basis, that means you're claiming a credit for the French taxes you pay in the year in question. So if you're reporting your rental income in the tax year 2022, but you haven't paid your taxes to France in that year, then you're going to struggle to claim the credit against the US tax on French income. So timing is important. So let's whiz on and talk about gains. We talked about rental profits, but what happens in the future when you sell a property in France? Well, the US is going to want to tax you on it. We've always stated that. Now, the US, as most American taxpayers will be aware, taxes its gains depending on how long you've held them. If you have held them for a year or less, the asset for a year or less, you'll pay ordinary income tax rates, which currently are up to 37%. Or if you've held it for more than a year, then you can get capital gains rates of up to 20%. And let's not forget that this is investment income, so any gain generated on the sale of the property, so it may attract the 3.8% surcharge, depending on your level of income. As we mentioned, well, the French may want to tax this gain as well, and in fact they will, because it is real estate located in France. The French will definitely want to tax that, whether you're resident or not here. So any taxes on any gain, you can claim a credit, but remember what I said in the previous slide. If you're on the paid basis for claiming credits, you're going to have to be very careful about the timing of those payments. Now, there are exclusions under US law for main homes. So if this is a property that you move into and it becomes your main home, then it may be possible upon sale to claim an exclusion of up to $250,000 or $500,000 if you're filing a joint tax return. So long as you've owned that property and lived in it as your main residence for at least 2 of the years in the 5 preceding sale. They don't have to be consecutive, but you have to have hit 24 months essentially. There are circumstances where you can get a partial exclusion. I'm not going to drill into them. Things like a change in work location, they're a little bit tricky. You don't really want to rely on that unless you absolutely have to. Now, I mentioned earlier about depreciation, how you want to claim that every year. It's a requirement that you claim it. So if you forget, then that's on you. But when you're calculating your gain for American tax purposes and figuring out whether you have to pay any tax on it, in the calculation of the gain, you have to add back the depreciation you either claimed or should have claimed. So there's the rub, and that depreciation amount, the amount of gain attributable to the depreciation recaptured, is taxed at rates up to 25%, and you can't exclude that. The primary residence exemption doesn't apply. So if you have a rental property that became a main home, you've got to claw back that depreciation when you sell the property, and there may be a tax of up to 25%. As I said, the French will want to tax it as well. The key thing here is do not assume that that it will necessarily be exempt under the primary residence rules. It may or may not. If it has been your primary residence for the entire period that you lived in it and you're resident in France, that's pretty clear. It will likely attract an exemption for French tax purposes. But it gets a little bit more difficult where you've had period of occupancy, you've left the country, and then you sell it, etc. So there is the possibility of claiming a partial exemption, but you really need to take advice in the run-up to selling that property to make sure that you can or cannot claim primary residence relief in France. Now, gains subject to tax in France, gains that are unrelieved, are going to attract a 19% capital gains tax rate and 17.2% of social security contributions. Additionally, if the gains are what are considered large, there can be a surtax on top of that, taking you up to potential rates of 42.2%. So you need to be aware that the capital gains tax regime in France from a tax perspective is not as friendly as it is in the United States. And do bear in mind that when we're looking at a global tax rate, there's no tax relief for the net investment income tax. So while you may be able to use this income tax paid in France to offset your US capital gains tax, you're not going to be able to offset that 3.8%. So your global rate could be as high as 58, 60% in the worst situations. But if you've got a good tax advisor, I'm sure they're going to be helping you to manage that down. Right. Double tax relief and foreign tax credits. Well, we've already touched on the notion that you can claim relief against your American tax for foreign taxes on the rental income and the gain. One point worth noting here is we've split out the French tax into two elements, income tax and social charges. And unless you fall into some very specific criteria, then you're going to be subject to what are called CSG and CRDS and a prélèvement social, making up that 17.2%. But the CSG and CRDS elements may be creditable against your American tax. So don't forget when these computations are being made that you're not just including the income tax as a credit, you're also thinking about the CSG, CRDS. So my final point that I want to touch on is about mortgages. Obviously, exchange rates are at an interesting position, and that's already come up and is going to come up more today, I'm sure. But what we need to think about when we think about taxes in an international arena is exchange rates are something we should think about reflexively. So when you're calculating your capital gain on the sale of your property, for example, you're not just computing the gain into euros and converting that to dollars. You're computing the cost in euros to dollars at the point that you bought it, and then you're computing the proceeds on sale euro to dollars when you sell it. So that can result in a gain that looks somewhat different to what you might be reporting for French tax purposes. On top of that, we need to think about the mortgage. If you've taken out a loan when you purchased the French property, and that loan is euro denominated, so non-US dollar denominated of importance, then you need to do that computation to figure out whether the loan that you pay back is cheaper in dollar terms than when you originally took it out. If it is, then you've got what's called an exchange rate gain that needs to be reported on your tax return. And it's essentially a dry tax recharge because it is a tax on a non-existent gain. It's a paper gain. And you won't have any foreign taxes payable on that to offset against the US tax. And just to make matters worse on that particular point, the net investment income tax of 3.8% may be due on it as well. So when you're thinking about mortgages and exchange rates, etc., you might want to think about whether or not you're making periodic capital repayments, like monthly repayments on the mortgage, which you likely are. But there is a de minimis of $200 of gain that doesn't get subject to these rules. So each transaction you do, if the gain isn't more than $200 on the movement in dollars, then you won't have a problem. And you might want to think about whether or not you can pay large chunks of your mortgage capital back at a time that suits you. If your mortgage arrangements allow for that, then you can do it when actually you're in a loss position or a very small gain position from a dollar perspective. And the other great planning technique is, well, marry a French person. Because that's non-resident alien, as in non-citizen, non-green card holder, non-tax resident of the US, won't be subject to these rules. So in summary, that's it. That's me done on the presentation. Be careful about how you own the property, whether it's directly or through an entity. You definitely want to take advice on entity. If you're going to use an entity, which can be for numerous reasons, they may not be treated equally between the US and France. And you may want to consider things like an entity classification for US tax purposes. Be careful about differences in computations. Do you get depreciation in both territories? So you don't have surprises in terms of large profit in one territory and smaller in the other. Are you going to get main home relief in both countries when you sell the property? Be really careful about the timing of French tax payments for those foreign tax credits. And of course, as we just said, keep an eye on the exchange rates. And the bottom line is, in this international arena, nothing's ever simple when it comes to tax. So take advice. Thank you very much.
Thank you, Greg. Some really important things for US buyers and investors to consider there. And a quick reminder, because there was a lot of information in that we are recording this webinar. You can watch it back as many times as you like on our YouTube channel after the event. So you'll be able to go back and take some notes if you haven't already. So I'm now going to put a few questions to Greg. So first of all, let me get them up. Here we go. Will US estate tax be due on my French property?
Oh, well, yes. I mean, that rather depends. I mean, the estate tax treaty is going to allow France the opportunity to subject that property to French inheritance tax because the property is located in France. It gets a little bit more wishy-washy if the property is owned by an entity rather than directly by the individual. But from a US estate tax perspective, well, firstly, there is a massive lifetime exemption currently for estate tax purposes in the United States, $12.606 million currently of exemption. So you'd have to have a fairly substantial property along with your other assets to fall within the US estate tax net. Though, of course, that exemption is due to sunset 2025, and the political climate could change and all of that could change. But what you should find is that the US gets the first step at the inheritance tax. And even if the property's value goes over the estate tax limits in America, that there is some relief available. So theoretically, yes, it could fall within the US estate tax, but there should be double tax.
Okay, great. Thank you. Okay, we've had quite a few questions about French property taxes. Now, we're not going to go into that specifically on today's webinar. However, we are answering quite a few of your questions with a link to an article that we have on FrenchEntrée that goes through all of that. So that should help give you a good grasp of the two main property taxes that there are in France to pay. But one question on that subject for Greg is, I hear French property taxes on second homes are increasing in 2023. Can I claim a deduction for these in the US?
Well, yes. I mean, the answer is yes, you can. I mean, if you're renting the property, then certainly the property taxes would be available as a deduction against rental profits. And yes, you can claim, rather like you can claim US real estate taxes, you can also claim French property tax as a real estate tax and an itemized deduction on your US tax term, but that's subject to the normal limits, I'm afraid.
Okay, and another question about deductions. Can I claim deductions in the US for works or renovations that I carry out on a French property?
Right, so if it is a genuine renovation, then that would be sort of classed as an improvement rather than an expense, something of capital value. So that would be an adjustment to the cost basis. So that would basically added onto your acquisition cost. So when you calculate your gain it is less because you've improved the property. And equally, these are items that you would include on your tax return if the property is rented, and they would be depreciable items rather than expensable items.
Okay, great. Right, we'll stop there with the questions for now, but remember, if you do still have a question for Greg or any of our other panelists, pop it in the Q&A box, as we'll have some more time at the end for questions. So before we go over to our third and final speaker, I'm just going to pop another quick poll up on the screen. Let me just, no, that's the same one. Let me find it. Here we go. There we go. You should be able to see that now. So the question, easy one. When are you looking to buy in France? As soon as possible, within the next 6 months, within the next year, or are you still at the dreaming phase? And hopefully, if you are still at the dreaming phase, we'll be able to answer some of those questions for you today to get you well on your way. And so I'll just give you a few more seconds to answer that. And then I will share the results with you, and then we'll go over to our next speaker. Okay, a few more seconds. Looks like most of you have all answered. Right, I'm going to end the poll and I will share the results. You should be able to see them now. So most of you are still at the dreaming phase. Quite a few of you as well, 35% within the next year, just 9% within the next 6 months, and 7% as soon as possible. So, okay, most of you are looking next year or for future plans. Okay, thanks for taking part in that. We'll stop sharing that. Right, let's go over to our third and final speaker of the day, which is Kelly Cutchin from MoneyCorp. Over to you, Kelly.
Thank you so much, Zoe. Thanks for having MoneyCorp here with you today. I'm going to go ahead and get sharing here, and we will get started. All right. Well, as Zoe mentioned, my name is Kelly Cutchin, and I am the country manager for MoneyCorp here in the United States. I joined MoneyCorp back in 2006, and for the last 16 years, I have spent the majority of my time helping individuals buy and sell real estate around the globe. Now, for many years, that looked like British customers and Canadian customers purchasing real estate here in the States, but trust me, over the last 3 years, the tables have certainly turned, and the majority of my energy has been spent on working with Americans looking to make their purchases over in Europe and specifically in France. So just a little bit about MoneyCorp. We're actually a UK-based company. We were established in the late 70s. Last year, we traded nearly $51 billion in foreign currencies, and with 120 different currency pairs. So whilst the information that I'll be discussing today is predominantly regarding converting US dollars into euros, just keep it in the back of your mind that we can do most major currency pairs in one direction or the other. We do have teams across the globe, and we're highly regulated in all of the areas that we need to be regulated in order to offer services to you. All right, so where are we located? I'm actually here in our Florida office. We do have offices throughout the United States, Canada, Brazil, Spain, the UK, and even France, but our services are certainly available to clients throughout the globe. All right, we'll get more to this in a bit, but it is an easy service to use. As far as our website is concerned, feel free to check that out. We have lots of news on there relating to overseas property guides and resources that could just be useful to you throughout this journey, especially if you are in those early days and just kind of in the dreaming phase. Now is the time for you to get as much information as possible. So feel free to check out some of those articles on our website. Additionally, what we're going to talk about for the most part today is about transactions relating to buying or selling real estate. But keep in the back of your mind that if you are someone that has already relocated to France, you may have requirements come up to exchange and transfer currency that relate to things outside of a property purchase. So those could be inheritance, sending funds back to friends or family, paying bills overseas, and so on and so forth. So just, again, bear in mind that these services can be used across the board for your currency exchange and international transfer needs. All right, so the number one question that we receive is, Why would I use a currency broker? Why would I not just use my bank to make these international transfers? And I'm hopeful that the results from the poll, which showed that 19% of people were, interested in the currency exchange aspect, I think that some of these things that I'm going to go through right now might actually cause that number to creep up quite a bit. So the first thing that you'll want to consider is that when you're utilizing your bank to make a transfer, they are going to charge you an international transfer fee, right? That's a nominal fee. It's a transparent fee. They're going to tell you about it. And that fee typically ranges between $25 and $50, could go up a little bit. But again, that's just a fee that the bank is going to tell you that they're going to charge you to make that transaction. However, the hidden profit lies within the margin. So banks are taking high margins. And across the globe, these margins do vary, but realistically, the margins range from about 2.5% up to sometimes 6 and even 8%. So that means that there are some banks that are taking approximately 5% off of the true exchange rate and selling you the currency at that variated exchange rate. Also, if you're going to use your bank to transfer your funds, then you just need to take the exchange rate on the day that you contact them and want to facilitate a transaction. There isn't much monitoring or guidance and assistance with helping you to agree the greatest time to exchange your funds. When you use a company like MoneyCorp or a currency exchange broker in general, you're not going to pay international wire fees. We have local domiciled accounts so that in the event you are converting US dollars to euros, you would simply do a domestic transfer from your American account into your MoneyCorp account. We would then facilitate the exchange and again, make a domestic deposit into the overseas bank account that you request for us to make a payment into. So no international transfer fees. The most important thing, however, is that we offer extremely competitive rates of exchange that will far exceed the exchange rates that you can receive by doing transactions through the bank. And I'll go into a little example here in a moment where you might be able to get a real visual on what I'm speaking about there. We do offer personal currency exchange specialists. So again, if you are in the early stages or if you need to make an immediate transaction, we'd love to connect you with a personal currency exchange specialist who can hear about your requirements and then help guide you to the best plan of action to make those payments accordingly. And again, we want to help you track and monitor the exchange rate so that you can benefit from the best possible rate of exchange. It's very easy to do. At the end of my presentation, I'm actually going to flash a QR code. You can set up a free account with MoneyCorp. There's no cost or obligation, but it is a very simple thing to put in place. If you never use it, that's okay. Get the guidance and the account will disintegrate if you don't use it. But if you do have questions or want to get expert guidance or even quotes on the exchange rate, this is your best way to do so. All right, so let's get into the fun stuff. Here we have Jane, very French looking woman, but Jane is buying a property in Nice in the south of France, and that purchase price is currently 237,600 euros. Now, if Jane, who lives here in the States, contacts her bank, she's likely to get an exchange rate of around 0.9664, right? Which would mean that that property is going to cost her 245,860 US dollars. Now, compare that with a currency exchange broker, we would be able to get Jane an exchange rate of approximately 0.9952, which means that exact same property that has not changed in price is going to cost Jane 238,745 US dollars. So at the end of the day, if you get nothing else out of this presentation, please make sure that you're shopping around to make sure that you are getting the best rate of exchange. It's not always who we tend to believe would be offering us the best service. But again, there are companies out there that can help you achieve a preferred rate of exchange, right? This isn't a small savings here, right? This is a decent savings. This is the furniture if you need to put furniture in your property, or this is closing costs. This is your flights, right? This is going to help us get where we want to go. All right. So moving right along, now we're going to again talk about Jane, who's buying that same property. But what I want you to point out and want you to pay attention to is how vast the exchange rate fluctuates over a period of time. So if you are at the early stages, or if you're hoping to do something in the next 12 months, the exchange rate is going to do a lot between now and the time that you actually need to make a transfer. So not knowing what's going on with the exchange rate is certainly going to cause you some challenges when you're budgeting for that overseas property purchase price, right? So we see here in August, 0.98, in June, 0.94, April, 0.92. So again, you're going to want to consider the fluctuation of the exchange rate between now and the time that you need to do any transfers. The great news is that MoneyCorp has the ability to lock into an exchange rate for up to 2 years. Okay, so this means that you can lock into the rate and eliminate the possibility of the exchange rate moving against you between now and the actual time that you go to complete on that property. There is no cost to take advantage of that service. It simply requires a 10% deposit of the total amount that you're wanting to transfer, which means you can keep the other 90% of your funds locked into any current investments that you may have the funds in. You can keep the funds in interest-bearing accounts that you have here in the United States. But again, it would only require a 10% deposit in order to lock into an exchange rate. So I wanted to just show you here quickly this graph, right? So we all know that the euro has been decreasing in value against the US dollar over the course of the year, which has made it a great opportunity for us to look to invest in Europe. But I wanted to point out that anytime that there is a trend, there are always ups and downs along the way, right? And a 2-cent movement in any given day isn't all that unlikely. So again, by working with a currency exchange specialist, we can help determine the best time of day or best time within a week that makes the most sense for you to forward purchase that currency. Now, even if you don't need those funds available to make a payment for a period of time, we can effectively go ahead and convert your US dollars into euros and hold those funds on account for you. You see, having an account with MoneyCorp is similar to having a multi-currency bank account. You can hold funds in dollars, you can hold funds in euros, you can hold funds in British pounds, you can hold up to 120 different currencies on there actually, but we can help to make sure that you have the currency available within the time frame that you need to make any payments. Again, we can help you target a specific rate or speak to you about booking a forward contract, which would be that locking into an exchange rate, if that makes the most sense for you and your family. All right, so next I want to talk to you about the Patriot Act, and this is actually something that I am extremely passionate about. And it's because I get a lot of phone calls with people in tears often, and it's because of things that are or could have been avoidable. All right, I know someone in the chat actually asked a question about selling their US property to purchase their French property. I would hazard you to ensure that you do not instruct the title company who's doing the closing of your US property to deposit your US proceeds into your American bank. If you're looking to use those funds for this international investment, there would be no need to do so. And actually, by depositing your US dollar funds into your local bank, you do run the risk of getting the funds stuck there if you are not physically present here at the time that you need to access those funds. So part of the Patriot Act actually states that you are unable to facilitate an international wire transfer without being physically present in your bank. As you can imagine, through COVID, where there were people selling international real estate, this caused a lot of turmoil because, of course, we weren't able to travel necessarily to where those properties were being sold. And subsequently, customers' funds were getting stuck in overseas bank accounts. So again, I would, before you leave to go visit a property in France or to go on a viewing tour, speak to your bank, find out what the limitations are. If there is a possibility that you're going to need to access funds whilst you're in France, you may want to seek pre-funding an account at MoneyCorp so that in the event you do need to make a deposit or access those funds, then it is just a phone call away. We can convert that balance into euros and then make a payment as you wish. But again, if you're in France and your money is in your US bank, there's probably going to be some challenges with you accessing those funds until you come back to your property in America. So if you have any questions about this, again, it's something I'm very passionate about, especially because there are things that we can make sure that you avoid. Please reach out to me. I'd love the opportunity to help and answer any questions that you might have relating to that. This is kind of a funny one. You know, people often ask what impacts the exchange rate, and the better question is probably what doesn't impact an exchange rate, because things like politics and governments and economic performance are certainly the obvious ones. There's things like current affairs and natural disasters that are somewhat unpredictable that do also cause the exchange rate to fluctuate. So let's look at what's kind of gone on the last couple of years. We had 2020, we had COVID, and we also had Brexit. We had a US presidential election. And what this did is it caused people to flood into the US dollar as a safe haven currency, which actually drove up the value of the US dollar. Then you have 2021, we started to see some global economies stabilizing, which meant we had a return of foreign investors considering purchasing assets here in America, which again, you named it, caused things to drive up the value of the US dollar. And then lastly, more recently, of course, what's going on in Russia and Ukraine has also caused the US dollar to peak up because, again, it's a safe haven currency. But what this ultimately means is that it's really increasing this trend of Americans looking to buy in Europe. And why? Again, because our dollar goes a long way right now, which in turn means Europe is pretty much on sale. I wanted to leave you with my contact information. I urge you, we're always available. Call, text, email me. We're here for you. We want to make sure that this process goes smoothly for you. No matter what stage you're at, feel free to reach out and have a generic conversation with us. We'd love to help. And then, as I promised, I just wanted to leave you with a QR code. If you are interested in setting up an account with MoneyCorp, you can take a picture of that there and go straight to the tab to help you do so. But I would love to answer any questions and answers, any questions. So I will go ahead and stop sharing now and pass it back over to Zoe.
Thank you, Kelly. Right, well, let's jump straight into a few questions for Kelly. Right, first up, I've heard it's difficult for Americans to open a bank account in France. Can I use my MoneyCorp account as an alternative?
Yes and yes. So yes, it is more and more challenging now for anyone to open up an overseas bank account. Even as a French national, it's ultimately very challenging for them to set up a bank account here in the US. And the same would go for you to open up an account in France. Now, it is relationship based. So there may be someone that knows somebody that might be able to help you set up a French bank account. So I won't say that it's 100% impossible. It just causes you to really make sure that you're contacting those that might be able to help you get connected with someone who could potentially help you. However, it isn't necessary because, again, you can utilize your MoneyCorp account to assist you with making international payments without needing an actual bank account in France, right? So we can send a deposit. We can make sure that the funds arrive directly with the notaire for closing. We can send money directly to a furniture company if you're looking to purchase furniture, and so on and so forth. So we can help you make payments on your behalf, negating the reason to have a French bank account until such a time that you relocate there and you're able to actually prove residency and obtain a bank account yourself.
Okay, brilliant. That's really reassuring to know. Okay, second question. I was looking to sell my French property, but the current exchange rate has put me off. What advice would you give to someone looking to sell at the moment?
Fantastic. So I think that you would firstly want to speak to someone like Sheila about whether or not it's a great time to sell your property in France. But if it is, and you deem that you would like to proceed with selling the property, what we would then suggest is that you have the euros deposited into your MoneyCorp account and then leave them there. Let's watch the market. Let's target a better exchange rate than the one that's available today. Now, in the event you go, well, that sounds great, but actually I need some of that money to help support my living back in the US. Well, that's okay. You can convert a portion of the euros that come in into US dollars so that that can help support your living expenses currently, but let's leave the majority in euros. Again, there will be ups and downs like there always have been and like there always will be, and we can help you to determine the best possible time to convert the remaining balance of euros into US dollars.
Okay, great. That's really good advice. I want to take advantage of the current exchange rate, but I haven't found the right property yet. What would your advice be for that person?
Set up an account with MoneyCorp. Start to have the discussion with your currency dealer about the current exchange rate and what the expectations of the exchange rate are likely to experience between now and maybe the more realistic time frame that you're working with. If we get to an exchange rate that you go, who would have ever thought it's never going to get better than this, then you should definitely consider doing a forward contract and locking into the exchange rate. Again, only depositing 10% of the total amount that you're wanting to convert into your MoneyCorp account so that we can go ahead and secure that rate of exchange for you. That way you can continue your property search and not have to change your budget because of a potential decrease in the value of the exchange rate at this moment in time.
Okay, brilliant. Thank you, Kelly. Right, I'm now going to open up questions to our whole panel again, and we'll try and get through as many as we can before we finish. We've got 15 minutes. So I'll just check if I've still got everyone with us. Sheila, are you still there?
Yes, I'm here.
Great.
Yes.
Greg, still got you?
Still here.
Brilliant. Okay, and I know I've got Kelly with me. Okay, right. Let's fire through some questions. Let me just bring up my question list. Okay, one for Sheila to start off with. If I'm paying cash and I make the 10% deposit, do I need to provide proof that I have the entire purchase amount available?
Yes and no. It's a bit of a complicated question. Yes, obviously the agency and the notaire would prefer to know that the funds are available, but we have to be realistic and understand that some people need that time between the first and second signing to be able to get the funds. So in that instance, no, it's not always possible.
Okay, thank you. Okay, a question for Greg. If you live in 3 countries, including the US, does the country you live in for the most amount of days qualify for income taxes? I guess this is a bit of a tricky one to answer, but perhaps you can shed a bit of light on that.
Being a tax expert, it's all about definitions, isn't it? So when we say qualifying for income taxes, I think what you mean is, am I going to be subject to the full weight of income tax in that territory? Now, the thing is, you need to look at whatever the residency rules are in the country you're involved in. So America will tax you on the basis of citizenship, whether you've got a green card, and if you spend enough days there. The UK will tax you on the basis of how many days and how many ties you have to the country. France will tax you based on whether your social economic activity is there and how many days you spend in the country as well. So the starting point for anybody who is cross-border in multiple territories is to figure out, am I resident under domestic law in this country? And then if the answer is yes in multiple territories, then you need to look at the treaties with the other territories to figure out if you can override that using a tax treaty. So that is a complicated question and would need to be analyzed in that way.
Okay, so yeah, probably a good one to get in touch with somebody like Greg if you've got that kind of situation. Okay, one for Kelly. What fees apply on a MoneyCorp account, and is there a minimum amount required per exchange?
Good question. There is no cost or obligation in establishing an account with MoneyCorp, nor are there any fees, nor do you need to pre-fund the account, right? So as discussed, even if you just want to use the account to receive expert guidance or ask a question, it's worth going through that process, which is 3 to 5 minutes tops. Our minimums are very small, so we can help you do a payment for as little as $250. So again, if you are needing to pay bills or send funds to friends and family, you can use the account for reasons like that. And there is no maximum amount that you can transfer through your MoneyCorp account. So no fees, no hidden fees, no cost to set up or maintain the account, minimum at $250, no maximum.
Great, brilliant. Thank you, Kelly. Right, Sheila. Is there any way that an American buyer and an American seller can handle the transaction in dollars and avoid exchanging dollars into euros and back into dollars?
Currently, no, there isn't. Historically, in years gone by, then yes, it was possible that certain notaires would allow those exchanges. But over recent years, 99% of the notaires will no longer do this, and the money for the fees and for the purchase has to be paid in euros. So sadly, the answer is no at the moment.
Okay, yeah, quite a few people are asking that one, so that's good one to clear up. Right, Greg, if we are selling our home in the US and establishing residency in France, should we sell our US property before applying for our French visa in order to avoid French capital gains taxes on the sale? I guess it's a capital gains tax question about, timelines.
Right. So I'm going to be slightly careful here because, again, I'm not the French tax expert in the room. So all of the above should be kind of verified with a French tax advisor. But the bottom line is you would need to establish when your French tax residency commences. The visa start date isn't necessarily when your French tax residency would commence, but it might be. And it's a valid question. Should you dispose of the property prior to becoming a tax resident in France? Because if once you are a resident and in the French tax system, then it's quite likely they're going to want to tax the capital gains arising on the sale of a property abroad. Now, there are exemptions that might apply. I think we've already alluded to the main home exemption. So I don't know what this property is being used as currently, but if it is your main home, it is possible that the French would give some tax relief depending on how long it takes you to sell it from then after. And equally, I'd bring you back on the American tax point that if it is your main home, you don't want to wait longer than 2 years to sell it when you're out of the country, because you will lose the $250,000 exemption I mentioned earlier. So yes, timing is everything, and you should think about that and take some advice, definitely.
Right, thank you, Greg. Right, Kelly, let me find one for you. Can monthly mortgage payments be paid with a MoneyCorp account? And also, is the MoneyCorp account linked to my American bank account, or are the funds wired or transferred from my, hold on, sorry.
I'm following it.
Two separate questions. Let's start with the first one. Can monthly mortgage payments be paid with a MoneyCorp account?
Yes, I actually understood both questions, so
okay.
I can tackle it. So yes, you can use your MoneyCorp account to make your monthly mortgage payments. And there's a couple of options, right? Because you can either tackle this requirement as it comes up every month, but of course, every month your mortgage may cost you $500 US, then $550 US, then $450. Because the exchange rate's fluctuating, you can't really budget what that French mortgage is going to cost you if you're only going to look at it every month. So what we would want to make sure that we're considering is, does it make sense for us to pre-purchase maybe 6 months worth of your French mortgage payments now at this advantageous exchange rate, and then send the payment out in euros on a monthly basis? So to answer the first question, yes, you can use the MoneyCorp account to facilitate your French mortgage payments or property management fees, you name it, any ongoing expenses. The second part to the question was, is the MoneyCorp account linked to your US bank account? And I believe what they're asking is, does MoneyCorp have the ability to direct debit your American bank account? And unfortunately, the answer there is no. You do need to push the funds into the MoneyCorp account. We cannot pull the money out of your American account. The good news is there's 2 ways to make a payment into your MoneyCorp, the obvious one being a wire transfer, but we can accept an ACH direct deposit, which means that it's probably a payment that will take your bank maybe 2 business days to get the funds into MoneyCorp, but there's likely no fee for them to do that. So as long as you're being prepared, and giving yourself time, then you can probably go that free route of an ACH, and electronic transfer into the MoneyCorp account. It'll take 2 business days, but that's okay. We're not waiting till the last minute to do this, but it does avoid you needing to send a wire transfer, which typically there is a fee for, although it would not be an international transfer fee.
Okay, that really clarifies things. Great. Thank you, Kelly. Right, Sheila, do you foresee a change in the property market in France in 2023, and what should buyers be aware of?
I don't think it's going to change that much in the next year. I think we've had the big changes during the COVID years. As previously mentioned, there is less property coming on the market, and I don't think that's really going to change in the next year. Prices are stable. We don't tend to have the peaks and troughs in France that other countries experience with property prices. So I wouldn't anticipate great price rises next year either. But I do think that properties that are priced correctly will still sell very quickly.
Okay, great. Good advice there. Right, Greg, one for you. If I spend a few weeks working remotely from my French property, how will I be taxed?
Yeah, good question. That happens to a lot of us these days, traveling around and having to take the laptop with us and work from a farmhouse or something. So one of the key things about tax law, particularly in Western societies, is that if you're resident in that territory, you pay tax usually on everything, though each territory tends to have its exceptions. But if you're not resident in that territory, then you pay tax on the economic activity in that territory. So typically you would think, well, if I receive dividends from a French company, I'll pay some tax in France on those dividends, or equally in the United Kingdom on UK company dividends. So if you are sitting at home working in your French property, then potentially you're performing economic activity and generating income. Now, usually, if this is only for a short period of time, like a few weeks or something like that, depending on whether you're an employee or a self-employed individual, the tax treaty usually can come to your rescue, and means that even though you're generating some income from economic activity in France, that you won't actually end up paying any French tax on it at all, and you'll pay everything back in the United States. But there are, as always, can be complicated rules around this and thresholds. So again, take advice specific to your circumstances to make sure you fall within those rules.
Okay, brilliant. Thank you. Right, Kelly, another dual question here. Right, does your MoneyCorp deposit earn any interest? And does MoneyCorp provide an ATM card with the account?
No and no. So these funds are held in what are known as a client safe account, which is effectively like an escrow account. So there would be no interest earned on funds held in your MoneyCorp account. However, bear in mind, you are under no obligation to hold any funds in your MoneyCorp account. So you can receive all the expert guidance, we can target a specific rate of exchange, and you would only need to transfer funds into your MoneyCorp account at the time that you actually wanted us to convert them and send a payment. So there isn't going to be a massive amount of interest lost on the funds flowing through the MoneyCorp account. And then the second question was in relation to an ATM. No. So there's no card linked to this account. We're simply facilitating currency exchange and international payments. What we would look to do is, once you do establish a French bank account, we would then be able to help you fund that French bank account, which you could then obtain an ATM card to utilize for your everyday expenses, such as groceries. But up until such a time that you have that French bank account, we can help you make as many of those payments as possible.
Great, thank you. Right, so we are running out of time. We'll try and squeeze in one more quick question for everyone, and then we will wrap things up. So back to Sheila. What advice would you give to US buyers who are looking to organize a property viewing trip to France?
a quick answer, as it's a quick question, is to give as much notice as possible, because we do get very, very busy. And sometimes, you know, to phone a few days beforehand and we've got to say, no, I'm sorry, we're fully booked, when you've paid out for a flights and accommodation isn't good. So the longer notice that you can give for your viewing tour, the better, please.
Okay, great. Greg, there's never any quick tax questions, but we'll try. When claiming tax credits for French taxes, is it better to use the paid basis or the accrued basis?
Oh, yeah, great question. Now that comes back to our timing issue earlier. So you can either claim credits against your American tax on your American tax return using the paid basis or the accrued basis. The paid basis takes account of French taxes you pay during the year. The accrued basis takes account of your French liability for the year. So the second one's a lot easier because you don't have to worry about the timing of the payments so much. But you need to be jolly careful, because if you select the accrued basis for your reporting your foreign tax credits, and then one day you decide that France is no longer good enough and Brexit Britain is looking very attractive and you would like to move there, you will be moving into a territory that has a different tax year end, not a calendar tax year end, and that can cause some real headaches. So you just need to be careful in choosing the accrued basis, that you might not run up in a situation like that in future, because you can't change away from the accrued basis once you've selected it. So as with all things tax, it's a crystal ball planning. You need to know what you're going to do right up to the end of your life to be able to plan properly.
That's why we need people like you, Greg. Right, final question for Kelly. I've had quite a few questions on similar things to do with forward contracts. If I enter into a forward contract and the rate improves, can I take advantage of a lower rate somehow?
So technical terms, once you lock into an exchange rate, you are locked into that rate of exchange. However, with everything, you'll speak to your currency exchange dealer, because they can actually map out for you, does it make sense for us to then sell the currency, eat the loss, and then repurchase the currency at the better exchange rate? So with everything, there is a technical answer, which is no, you're locked into the rate of exchange. However, there are situations that we should discuss to see if it does make sense for you to actually cancel the existing contract and rebook at the better rate of exchange.
Great. Thank you, Kelly. Right. Well, that is all we have time for today. Thank you so much to all of you who attended, and thank you so much to our panel for giving up their time and answering all of your questions today. If we didn't get around to your questions today, I know we have had a lot of them. We will make sure that we forward them on to the relevant panelists, and we'll try to get back to as many of you as possible. And if you do have any additional questions, or if you want to get in touch with any of today's panelists, you can email us at webinar@FrenchEntrée.com, and we will make sure we put you in touch with them. If you enjoyed today's webinar, keep an eye out for more French Entree webinars over the coming months, and make sure to subscribe to our French Entree YouTube channel. A few of you have been asking the address. If you just type French Entree into the YouTube search bar, you will come up on our page. We publish weekly videos there, and we'll also be publishing this webinar and all of our other webinars on that page. And finally, do let us know what you thought of today's webinar. Did you enjoy it? What topics would you like us to cover in upcoming webinars? You can drop us an email at webinar@FrenchEntrée.com. Thank you once again to everyone for attending. Thank you one more time to our panel, and I will hopefully see you all on our next webinar. Have a good day.